Well, ladies and gentlemen, the housing market is not slowing down no matter if we have a war, interest rates are rising, we have high demand, low supply. And in this video, I'm going to explain to you all the reasons why the Phoenix housing market is not slowing down here in Arizona. And I would think from last year's data that we were actually going to have a slowdown, especially with what's going on with the economy. We had the germ, right, for quite some time. We have interest rates rising. The federal government is getting involved. We have the war with Russia and Ukraine. And it's just crazy how this market is still not slowing down. So in this video, we're going to get into some topics here for you guys. We're going to get into some listings. Okay, I'm going to show you what's inventory we have. We're going to get into some price. We're going to get into rent prices. If you're thinking about renting, you might as well just buy because you're going to be paying out of your you know what. And then also we're getting into interest rates. Of course, they've rose. And I'm getting a lot of questions like, hey, man, these rates are crazy high. And I'm like, look, I bought my house at 6.5%. 6.25%. So they're not really that high, but we've been kind of babied. And this kind of ties into the housing market here in Arizona of what's going on. So with that being said, let's deep dive into the data. All right, folks, well, you made it this far, so do us a favor, help our channel grow. Hit that subscribe button and that bell to get notified once we drop the latest video. I mean, we're just bringing you the housing market updates just like this, home buyer tips, home seller tips, and investment tips. Of course, we hold a small portfolio of rental properties. If you're thinking about investing in Phoenix, Arizona, we can do that as well. So do us a favor, smash that subscribe button and that like so you can get notified when we drop the latest video. So let's get into this data. All right, so the first chart I want to get into is supply and demand. Show you what's going on here in Phoenix, Arizona, and show you all the reasons why we have so much demand, very low supply, and why this is one of the reasons why the Phoenix housing market here in Arizona continues to go up. So let's take a look at this chart. All right, ladies and gentlemen, so this chart right here is from the Cronford report, and I extract all this data and convert it into layman's terms so you can understand what's going on with the Phoenix housing market. Now, I'll be looking at the lens and my screen so you guys can see what's going on. But you can see right here is at 100, this is a normal market, meaning that there is no advantage as you as a seller or a buyer. Okay, so right now, we are at the Cronford market index is a negative 121.3 and the supply index is a negative 25.7. So that means that we need the supply index to kind of come up to meet demand. So if you see this big gap right here that's been happening since probably right here of February 15th of mid 2014, that is when the gap started happening as far as supply and demand extracting with itself. Now, if you go back to in history, in 2008, you could see here that the demand was high. We had so much supply here that was built in 2005 as far as homes, and demand reached, and that's what created the massive crash in 2008, which happened around 2000. After 2008, that's when the crash happened. But you can see here is now we have a demand and supply issue, and this gap has just gotten wider and wider. So until this gap closes, we're still going to have a massive supply shortage. We have so many people moving to Arizona that this is creating a supply shortage of housing, not only as far as single family homes, but multifamily and rents as well, residential rentals. It could be apartments or homes. But until this gap closes, we are going to have a massive supply shortage, and it's going to continue for quite some time. Okay, ladies and gentlemen, so chart number 2, the housing market in Arizona, why it's not slowing down, is I'm going to show you the active listings for sale for about maybe 3 years back. Let's just go back 2 years. When we thought it was going to slow down, I saw 10,000 listings, and I said, oh my gosh, it's finally slowing down. And then all of a sudden, it just kept on dropping, meaning supply. We had all this demand here. We had these listings coming up for sale, over 10,000. And I was excited because I was like, okay, now we can help as many people as possible get into a house. It's going to slow down. Prices are going to actually be stable, maybe trend down a little bit, not too much, but at least it's going to be stable. It's not going to take off, and we'll be able to help out more people, help serve them get into their first house, an investment house, second home, etc. But then this happened. So let's take a look at this chart. Okay, ladies and gentlemen, so this is the second chart I want to show you. This is the new listings per month. Now, the reason why I thought it was going to slow down is because we had reached close to almost 10,000 listings in 1 month. And I was like, okay, it's going to slow down. Here we go. The closest we got to 10,000 listings was right here, 8,688. We were rising. You can see here, it just continued rising because in 2020, we started off at close to 7,600. And it rose, it went down, then it rose here to 8,000, 8,468, 8,527. Then it went up to 8,688. Then all of a sudden, that was October of 2020. Then it dropped to 6,327. So that was like a big shocker for us because we had thought that listings were going to continue to rise, where we're going to serve more people. And all of a sudden, they just disappeared. And if we look back at the 2006, 2007 area years, we had over 134,899. Okay, those are total active listings for the entire year. But right now, we are sitting at total right now, as of 2022, we only have 20,111. Last year, we only had a total for the entire year, 92,725. Now, this is a massive shortage, and it just seems like it's getting worse and worse and worse month by month. And there's a lot of reasons why this is happening in our housing market here in Phoenix, Arizona. And then I'm going to give you some more charts so you can kind of understand where we're going. And of course, I don't have the crystal ball on what's going to happen here, but this Crawford report is so important for you and for me as your agent, is it kind of predicts what's going to happen. And we're trying to predict, like, hey, when's the dip coming? Will there be a crash? What are listings doing? What are prices doing? So this is a very informative video for you guys, especially if you're thinking about buying here in our Phoenix housing market, you're relocating to Arizona, or if you're moving to Arizona. So that is the new listings by month. And you can see as of right now, as of March of 2022, we only have 6,357. Next chart I want to get into, this is the median sales price. You can see what is happening as far as home prices on the rise. Now, this chart looks a little scary, to be honest, and it's worse than the actual crash, right, of 2008. But you're going to see, I'm going to get into the backbone of this, is why I think that the market's not going to crash because of loans. There's going to be a correction somehow. How that correction is going to happen, I don't know. And this is like a vertical hike going up, right? You're going up Mount Everest right here. So let's take a look at this chart right now. Okay, ladies and gentlemen, so this is the monthly median sales price for homes here in Phoenix, Arizona. So the Phoenix housing market has increased dramatically. And if you have not purchased a house and you are thinking since back in 2011 of August that the bottom hasn't fell out yet, it's not time to buy, and you have waited till right now, well, my suggestion is if you keep on waiting, you're going to pay a higher price. I call it Calizona. Okay, Arizona, not that California is increasing our prices here, but we're catching up to some states in California as far as the vertical movement and the price range. And this price range going up now, your median sales price right now, meaning that you're going to buy, these are properties that are selling. This is the overall, these are just single family homes, no townhomes, no patio homes, no condos, single family homes. Okay, and I'm taking HUD owned homes, normal sales from sellers, REO and short sales where we don't really have any at all. You're about 490,000. So that's the average median sales price. Okay, so that's where you're going to be at if you're a first-time home buyer. That is the bottom line, the bottom price point. You're going to be at 500,000. Okay, and you can see this chart has just gone up and up. So if you have bought a house in before this rise in appreciation in price point, you are sitting pretty. If you're looking to sell, you got to make a plan so you can get some of this equity to buy at the new price point. And yeah, sometimes it doesn't make sense, and I'm not going to urge you to sell, but if your house doesn't suit you, prices are going to continue to rise. That's the outlook, and I'll show you why and the reasons on the next chart. But this chart is kind of scary. It's kind of good to Arizona, but it's definitely pricing out all the locals, and it's pricing out a lot of people who are making over six figures here in Arizona as well. All right, so the next slide I want to show you on the housing market in Arizona, why it continues to get worse here and it's not going to slow down, is if you're renting, you have missed out in so much wealth generation. Not only for you, for your family, to do what you need to do financially, right? If you've owned a house since 2011, you have gained so much equity. And there's so much that you guys can do. You're sitting on a pile of cash. Maybe you don't know what to do or what you should do with that money. And real estate is the best investment. It has been the investment for myself and my family to create cash flow, retirement, college funds for our kids. It's just an asset that doesn't live on wheels. It's not a stock that you have to worry about. I can drive by, take a look at it, walk into the door, make sure my tenants are paying rent, keep up the property, and the appreciation of our rental properties have gone up significantly, just like our primary residence. So with that being said, let me show you this annual appreciation for the entire state of Arizona, but it's priced per square foot. So let me show it to you, and then you guys can kind of digest what I'm showing you here. Okay, ladies and gentlemen, so here's the chart right here for the appreciation. And look at this big gap right here. You see the top here, I'm at 2020, 2021. Look at the gap from 2019 to 2020. In 2019, we had 4.7% monthly appreciation. And that was between May and June. And then in 2020, we had 4.5. 2021, we had 38.4. Okay. And then of course here, we're looking at this, we're at 2022. Now, if I go back to 2018, you can see we're still down here. So this is where we're at from 2020, 2021, 2022 is appreciation just keeps on going up, and it's going to continue here in Arizona as we don't see prices slowing down here at all. It's just the name of the game. When you have a lot of demand and very low supply, prices continue to rise, even with interest rates rising as well. So if you're not in the game and you're continuing renting, the price that you're paying for rents, you might look into buying a house, because it's not going to get any prettier here in Phoenix, Arizona in our current housing market. So maybe you are renting a property here in Phoenix, Arizona, and you're a local, or maybe you're moving here to our Phoenix housing market and you're like, I'm going to rent a property for 1 or 2 years. Well, I want to show you this rent chart so you can understand what you can be paying for rent here in Phoenix, Arizona, because if you're going to be paying over like $2,500 to rent a house, maybe you should just buy a house and get this appreciation that's going to happen for maybe 1.5 to 2 years. Because with our low supply and high demand, these rents are going to continue to go up. Landlords are raising rents here in Phoenix, Arizona. That's all I'm going to tell you, is they have the ability to raise rents when they want to and to keep up with the rent dollar amount that's happening across the nation. Okay. And apartments are raising the rents as well. So it's better to have a fixed payment going in to your next year than having to worry about like, man, I wonder if my landlord is going to sell, because we don't know when the shift's going to happen. And some landlords are like, man, I'm going to cash out right now, wait it out, see what happens. Or I'm going to raise the rents because they know that there is low supply and high demand as rental properties. So let's take a look at this chart real quick. So let's take you back all the way to 2015, where you can actually rent a property for $1,312. Now, these are all single family homes. There's no condos, there's no townhomes, etc. here. But if you look at this chart, rents have increased since 2015. And currently right now, you're going to be paying about $2,495. Okay. And of course, this is not including vacation rentals, but this is what you're going to be paying. And of course, it's going to depend on square footage, location, etc. But this is the monthly median lease price per month is $24.95. Now, of course, you can find something a little cheaper, but I'm going to tell you is if there is a rental property out there, you're going to be competing over 30 plus applicants. And how do I know this? Is because we have investment properties. When we just had a property in Chandler go vacant, we put it up for lease. We had over 35 applicants. Okay. So my wife took care of that one. I'm too busy. I can't be taking care of the rental property on that one. She took care of it and she was overwhelmed. Okay. By dealing with all the applicants, talking to people, and she was like, I'm just gonna choose the best one per the application and go from there. And when you're overwhelmed with that, we never had so many applicants like that on our properties, and people are just begging for a house. So if you're moving here in our housing market to Chandler, to Phoenix, whatever it is, to find a rental property, and you're gonna be paying like over $2,500 per month, you better consider on maybe just buying a house and holding on to it for quite some time, because the appreciation is going to continue to go up. And why not capture some of that equity? Because when you're renting, like I said, you don't even know if your landlord's going to want to unload that property in a year. They can increase the rents, and then you're not getting anything anyway. You're just burning your money away. So just multiply $24.95 times 12. Swallow that money, because that's how much you'd be paying in rent for a year. And that is ridiculous. So reach out. Maybe we can help you all get into a house, because if you're paying this much money, yeah, I think you have better options than just throwing your money away in the fire pit. A lot of people have been reaching out and be like, Victor, man, I can't buy. These interest rates are so high. Yeah, I'm just going to wait it out. And I talked to them like, okay, well, you think rates are high now? And they're like, yeah, I'm going to wait it out. And I said, well, you are going to be paying rent for quite some time. These rates are going to continue to rise because of inflation. And the federal government's trying to bring down inflation by increasing rates to slow the economy down. These rates are going to continue to go up. Now, we purchased our home back in 2001, and my rate was 6.25%. And I think the situation here, or what we've been programmed in our mind as a story, is that rates should be in the low twos all the time, right? The federal funds rate was at 0, so rates should be at 2. We've been programmed this for years, and they did this to get the economy going, right? So now we've been programmed that rates, oh man, rates are too high. But I want to show you this chart here is because you can wait it out. That's up to you. But if it was me, I'd jump in right away, because these rates are going to go higher. But right now, and you can go to FreddieMac.com /PMMS, which gives you the rates. So right now at a 30-year mortgage, you're getting at 4.42. Now remember, 2001, if you owned a property or if you bought a property, you remember the rate, my rate was 6.25. Okay. And that was high. Yeah. Prices were lower back in the day, but still you're at 6.25. But right now you're sitting about 4.42 per Freddie Mac, 15-year, you're looking at 3.63, and then a 5/1 ARM is 3.36. Now, yes, they're writing ARM loans again, which is getting a little scary, and they're doing that because affordability has risen, and it's getting a little hard for people to actually being able to afford a house. But you see, we've been blessed for a long time. You know, if you kept on pushing it out, like I'll buy next year, well, your opportunity came and gone because the rates were in the 2s. I mean, we got babied for quite some time. And let me do a 3-year here and you see here in 2019, here you go, 2020, you see there in the 3s and the 2s. So we've been babied for so long and programmed that, hey, rates are going to be this low, so I got time to wait it out. Now that inflation's here and rates are going up, it's time to make a move, because these rates are going to go up. And I think they're going to hit about 5%, just to be honest. So just keep that in mind if you're still renting and want to wait it out, because if prices go up, interest rates continue to go up, well, that's going to make your square footage shrink, and it's going to push you on the outskirts of the cities. So just keep that in mind. That's where rates are at. But are rates high? Yeah, they're higher than the 2s, but they're still very, very good rates. And of course, it all depends on your score, your credit score. And also, you can always buy down your rate, right? It's going to cost some money, but if you're not liking your rate, you can always buy it down. That's still an option. So just keep that into consideration. Okay, so let me get into some listings here and show you what the price range you're looking at and the location on the map where you can see what's going on here. This is very important because in our housing market here in Arizona, it's not slowing down, and I'm going to show you how many listings we have available as of today. So let's kind of deep dive into this chart right here. So right now we have these are single family homes. Let me move my fat head over here out of the way so you guys can see what I'm talking about. Let me make myself into a little midget. Okay, here we go. Sorry about that. So as you can see, no, you can't see anything because I got to zoom out. Okay, we have 3,204 listings for sale. This is from 0 price range to max price range. Now we're going to change it up. Okay. So let's just say like, hey, I can only afford $400,000. Okay. Now these are 3 bedrooms, 2 baths with a 2-car garage. And usually your first house is going to be at least 1,800 square feet. You have 63 homes to choose from. Okay. Now take a look at this. This is the map on where you're going to be living at this price range. Okay. Which is pretty far out of the city. We're talking about Santan. We're talking about Maricopa. We're talking about, well, Glendale's a really good area. They're older homes. They're perfectly fine homes. So you have some surprise. But you only got 63 homes to choose from, my friend. 63 homes to choose from. Now, if we open it up to 500,000, you can see it gets populated a little bit. Oh, there we go. That's like the sweet spot, okay? So that's why I was telling you, as a first-time home buyer, your bottom price point, you got to be at 500,000. Now, the sweet spot, I'm going to tell you where the sweet spots is between 500 to 800,000. Okay, that is like the sweet spot right now, because look at, that's 1,000 properties. And then we're gonna map this out. Let's see here. There we are. That is the sweet spot. So if you're looking for a house, you've got to be at 500,000 or above, unless you want to get a condo or townhouse, or unless you want to live pretty far outside in the city. I'm talking like Buckeye, Santan Valley, down south in Queen Creek, down in Maricopa. But that's exactly where the sweet spot is right now. Between 500 to 800,000 is the sweet spot right now here in Phoenix, in our Phoenix housing market here. And this is one of the reasons why I call it Calzona, because this price point is crazy. When you could have bought a house for, let's just say, 260,000 at like 2,500 square feet back in the day, right now you're gonna have to be at 500,000 and above. Okay, so the sweet spot right now is 500,000 to 800,000. So if you're looking at $400,000 and below, it's tough. I mean, it is tough because we're still getting outbidded. There's a lot of people getting outbidded with FHA loans, VA loans, and it's just people buying cash and buying rental properties here. That's just the way it is. But that's what's happening as far as homes for sale here in Phoenix, Arizona, in our Phoenix housing market.
If you have any questions, email me at victor@freeagentproperties.com. Again, that email address is victor@freeagentproperties.com, where we release new videos each week on home buyer tips, home seller tips, the Phoenix housing market updates, so you can be mindful when you're thinking about buying, selling, or investing in real estate. We will talk to you soon.